Hi, I'm Kep Kepner CPA here in Dallas. Today I'm going to tell you the story of two audits. I have one client who's facing an IRS audit, and during the tax year in question, they did a couple of things that are subject to review. One is they didn't issue 1099s to all their contract workers. Now, some businesses don't have many contract workers. This happens to be a nightclub, and they had bands that came in every weekend and on various weeknights, and they didn't get Social Security numbers or tax IDs for these bands, and they didn't issue 1099s. So here's a case of not being able to defend a couple of $100,000 of expenses every year. Now, when the IRS audits, they can actually go back 3 years. In this case, they're auditing 1 year and the year before and the year after. So that's one of the problems. The second problem is that they paid car payments of the owners. Now, there's nothing wrong with that, but that doesn't really prove the part of the car payment or the car usage that is for business. It's okay that that payment showed up every month, but what was missing was evidence that the car was really used for business. So they've got an issue right there. The IRS today is looking very closely at basis information. That's the money that you put in your business plus the income you've earned less the money you've taken out. If you can't prove your basis, then if you show a loss in a particular year, you may not be able to take it. So there are some complexities in computing basis, and in this particular case, they looked at that, but their records were okay on that point. So now we're facing the next visit by the auditor in about 6 weeks. Generally, if you work with the IRS in an audit, they'll schedule a couple of days, then they need to go away for a while because their calendar's booked, and then they'll come back for another couple of days, and then they'll come back again. It's a long process, so you better be patient. So in this particular case, one of the owners lives in Atlanta and one in Dallas. So since this is an S-corp entity, then greater profits because of denied expenses means that the individual tax returns have to be at least amended, if not audited. So it's going to be a long-term complex deal. But let's take the other case. This client is a contractor, and the IRS asked for copies of all tax returns. The client only provided the tax returns for the major business account. So what did the IRS do, as they're prone to do? They subpoenaed all of the bank records from all of the banks for all the years they wanted to look at. So my client, when he wasn't able or didn't want to cooperate by sending all that, the IRS has a way of getting all this information. So they went out and got it. The other thing that occurred was that my client had a bunch of expenses that were cash oriented. He would go to an ATM, draw cash out, then he would go to a job, and at the job he would pay day laborers and he would pay for materials and things like that. But he didn't keep his receipts matched to his cash outlay. With the IRS, you've got to prove the business expense and you have to prove you paid it. So he was looking at about $20,000 worth of cash expenses. The third issue that he had in his audit was the fact that he paid a bunch of day labor. So questions all came up. They didn't get 1099s. Were they legal U.S. residents? Were they employees rather than contract laborers? All these issues. So we had a strategy and were able to account for most of that. So the IRS agent went away, going to come back in about 6 weeks. My client went to work on those cash expenditures, trying to find the answers, gathered some of that information, We got a letter today that the agent said they're going to pass the audit with no change. Now, I can't tell you why. I'd like to say it was great CPA work, and we certainly did our job on behalf of our client, but who knows? If the IRS wanted to get really tough on this client, they could have gotten really tough on all three of these issues that I talked about. So you don't know what it's like when you deal with the IRS, whether you're going to have a great result or a poor result. When you have good representation, the odds are you're going to have good results. But even the best representation can't overcome something that you've done wrong. When dealing with the IRS, the approach you take is you are cooperative but not helpful. You don't volunteer anything, you answer their questions, you gather what they want. Generally, an IRS auditor has a list, and they check off the list. So if they can't get information because you don't have it or the CPA can't provide it, maybe the CPA, like ourselves, can talk them out of needing it. If that's the case, they'll check it off the list and they'll go to the next thing. So you always want to be cooperative but not helpful. You don't want to volunteer information. So if you want to have good results in an audit, you got to handle it right, and we can help you with that. Thanks.